Hi, this is Paul from globaltradingsoftware.com, and this is a swing trading tutorial, stock swing trading. I'm looking at MT, Mike Tango. I'm looking at the weekly time frame. I'm going to use multiple time frame strategies. I'm going to be looking at the potential fifth wave move using our Elliottwave indicator suite. This is the think or swim version, and then I'm going to be looking down at time frames to actually see where my entry is, because this is even quite gappy on the weekly here. So one of the things I just want to discuss first is we've had a real great bullish trend here back from the pandemic pullback, and now we're moving very, very well. Some of the weekly signals here on the xBratAlgo. Now we do the xBratAlgo, the swing, the Elliottwave, and everything's included in our big swing trading bundle. This is for serious swing traders. We had a 5 and a 6 star buy here, around about $16. The highs here was at 36.66. So these were great signals. They don't come very often, but when they do, you've got to take them, because that was a great impulse move there, which basically formed this Elliottwave 3, which we've topped out, and now we've pulled back on an Elliottwave 4. Now this is brilliant. It's performed very well. On the bottom subchart here, we see the false breakout stochastic, so that denotes a really strong bullish trend. We can see that, but when that happens and it crosses over against there in the oversold zone, which is not quite done yet, we're looking for that stochastic to return to that main bullish trend in the overbought zone. We also have our Elliottwave oscillator here pulled back in the right zone between 90 and 140. The wave 4 pullback has found support in the green zone on our automated pullback zones here. So that's an 85% probability. If that support holds, we're going to go on and hit these new highs in the fifth wave target zone here, which is automatic, $39.30 in the middle of there. Also, these non-linear support and resistance zones, these EMA clouds, 55 is the grey. 55 is above the 89, so we're bullish, but also you'll see this has acted as support and bounced out of there. So there's a lot going for this trade. We're trying to break out this regression trend channel right now. But the thing is, you've got to use the multiple time frame strategy to both confirm that we're going to go bullish, but also where our entry is going to be. So this is the weekly time frame we're looking to, and this trade could be on for 3, 4, even 5 months. But we've got to make sure when we invest in this, we're going to look for that sensible entry. So I'm just going to go down time frame. I'm going to go intraday to the 4 hour first. 4 hour and daily is pretty similar. We can see here, and one of the things we look for is this pullback that we've had on the weekly. When you go down to a 4 hour time frame, you can see that was an Elliottwave. So we had 1, 2, 3, 4. Then we've had the fifth wave short, which was a great trade. Okay, but more importantly for now, we can see this regression trend channel from the weekly, and we have got what we call oscillator divergence. So I'm just going to pull up here. So on this Elliottwave move on intraday, during that pullback on the weekly, we've had an Elliottwave fifth wave sequence, and it's hit our automated target zone and bounced off. So we can see the oscillator down here that we can see this sort of lower peak here. So we can see the trend line facing up. Now the wave 3 to wave 5 pivots, it's facing the opposite way. So we've got what we call oscillator divergence, which is a great tool to say, hey, potential trend reversal here, potential trend reversal. So we've got to think about we've got this potential signal for a fifth wave move on the weekly. We've gone to the 4 hour time frame. We can see that this pullback during the weekly has behaved very well as far as Elliottwave's concerned. We've got this oscillator divergence now, which is saying, look, fifth wave target was hit. We've bounced off there. We've got this Elliottwave, we've got this divergence, this oscillator divergence. So we've got this potential trend reversal coming out here. We do need to be out of here, but then I want to go down even further to the hourly time frame to see what's happening. So we just go down to the hourly time frame. Now we can see, look, little on the hourly time frame, we've got this little 1, 2, 3. We've had a wave 4 pullback, and now we are looking at a fifth wave target right at the upper bound of that regression trend channel. But also we have a 6-star buy here on the hourly time frame. Remember, for those that are using the xBratAlgo, we always look for a long above the signal candle here. So this signal candle is still good, but we have to look left, and I just want to put in this support and resistance zone here. This linear support and resistance zone from the wave 4 on the hourly, and I'm going to bring it across there. Okay, so we've taken in all of this resistance there. We've had the fifth wave move like we had on the 4-hourly hit from the wave 4 down here. So those intraday traders, it was trading Elliottwave, great move, fantastic short, and we're into there. But now we're in a situation where on the hourly we've got this 6-star buy. We've got some resistance to get through first, but also we've got this fifth wave target, but I want to be above. So I'm looking at the whole dollar mark, just above $31 is a sensible entry for me. I'm just going to draw that on this 60-minute, and then we're going to go back on the weekly and see what it looks like. So we're going to probably look for a 31.03. Okay, I'm going to change that to green. So we've gone down the time frames, looking at the behavior. We've got a good signal on the weekly. We've gone down to the 4-hourly, and the daily looks pretty similar, but I chose the 4-hourly. Then we've gone down to the hourly time frame. Again, you can see this move down within the channel on the pullback on the weekly has hit that fifth wave target zone. We've got that oscillator divergence on the hourly as well. We're trying to pull back out of this channel. I think we need to clear out of this channel. We need to break these pivots here, and that also that 6-star xBrat buy will give us that confidence intraday, and more likely we'll get another one of these on 4-hour. So let's go back to the weekly time frame. Again, if you're a serious stocks trader, swing trading or investing, you need to be looking at multiple time frame strategies here. So we can see that's going to be our entry. We've gone through the time frames. Our stop for this trade has to be below that wave 4 pivot there. So let's draw that on. And then the final thing we're going to do is work out our risk to reward, because we need enough fresh air to our target. Let's just change the color here to red for danger. Okay, so now we have our stop, if you like, our entry. We have our target because there's an automated fifth wave target zone. So we are clear. We've got a good entry strategy by using that multiple time frame strategy. Now we just need to work out the risk to reward. Use a fib extension. We're going to click once on the stop, second time on the entry, third time on the entry. So there we have over risk to reward of over 1 to 2. You know, it's 1 to 2.5, 1 to 2, 1 to 3 even, into that $39 target. So this is sensible now. On the weekly, we have a bias of neutral. That bias indicator is neutral at the moment. I think we need to have a good push out. We need to break this little resistance level that we put in there from the intraday time frames. But then, you know, this is not going to be plain sailing. We are going to hit this weekly resistance level here up at this point, but it could take quite a few weeks to get there. Okay, it's a little one, it's a shoulder, if you like. So at this point, if we get in this trade and we're approaching $34, we either decide to take the profits or sensibly probably adjust the trailing stop just above break even there to make the trade risk free. But in reality, that would probably cause a bit of a pullback. We'd look for a higher support and then we'd look to go. So this is a weekly time frame. So when we're swing trading this, you could go up to 20 weeks in this. Usually between 7 to 20 candles when you're swing trading that fifth wave is where we're going for. So that's 7 to 20 weeks. So if you're going to trade this with options, you need to go out, you know, at least 6 months, if not longer, depending on what options plays are there. But again, using multiple time frame strategy, re-look over this, go through what I've done, because you need to understand what's happening on those intraday time frames, the behavior, what's happened, you know, all the things that I've discussed to actually help you with that entry strategy. Put the stop on, risk reward, fantastic. It's 1 to 1.6 to these highs here, so got quite a good bit of fresh air there, and looking like a really good potential trade. So 31.07-ish is probably the entry. Make sure you're above $31, and away we go. Great looking trade. Hopefully this has been helpful for those stock swing trading people. Again, our swing trading bundle is quite complex. There's a lot of tools in there, but it gives you lots of trading opportunities, whether it's the xBratAlgo, which looks for those trend reversals and gets in early into those trends, or whether it's the Elliottwave indicator suite that actually gives you that fifth wave move, high probability moves, or in fact the EMA clouds and all the other indicators in there, harmonic patterns and that sort of thing, to give you lots of other different types of trading opportunities. But what I've done is, like any tradesman, I've used certain tools within that trading bundle toolbox, if you like, to put this training video together to help you understand not just how some of the indicators work together, but also using that multiple time frame strategy to get good entries, check behavior, and get those high probability moves. Hopefully this has been helpful. Speak to you all really soon.